190 million XRP just dumped in 48 hours. We're talking about $95 million worth of selling pressure, and honestly, this might be the capitulation bottom everyone's been waiting for, or it could get way worse. I'm breaking down exactly what's happening right now. What's up everyone, I'm Gold Rush, and if you're new here, welcome to the most real crypto commentary. We look at what's actually happening in the market, and today, we've got two absolutely critical articles that explain the XRP carnage happening right now. Stick around because by the end of this video, you're going to understand whether whales are abandoning ship or if they're loading the boat for a massive bounce. Let's start with this interesting article from Invez. The headline alone tells you everything you need to know about the current market sentiment. XRP just slipped below that critical $2 psychological level, and folks, psychological levels matter way more than people think. When these round numbers break, it triggers a cascade of liquidations and stop losses. Here's what's going down. Bitcoin, Ethereum, and XRP have all gotten absolutely hammered this week. We're talking 8%, 9%, and 10% losses respectively. Bitcoin's below 86,000 for the first time since May. Ether temporarily dropped below 2,800. And XRP, as you can see in this article, it lost that $2 level entirely. Now, here's where it gets interesting. The Fear and Greed Index is sitting at 11. 11, that's extreme fear territory. The crypto market literally wiped out $120 billion in the last 24 hours alone. That's not a correction, that's a cascade. But here's the thing that caught my attention immediately. Despite all this bearish price action, XRP's daily volume surged by 28.44% to hit over $6 billion in volume. This is critical. High volume during price declines usually indicates profit-taking and repositioning by smart money ahead of the next move. Translation: professional traders are preparing for something. Let me break down the technical setup because this is where it gets fascinating. According to this article from Invez, the daily RSI is at 32, which means we're approaching oversold conditions. The MACD is still in bearish territory, but when you see RSI that low, combined with massive volume, you're setting up a potential reversal scenario. The key support levels everyone's watching, we've got $1.78 from the October 6th low, and then the major support down at $1.62. If XRP holds that $1.62 level, we could see a legitimate bounce, but if it breaks below that, we're looking at extended downside, potentially toward $1.20 or lower. The current price, as of press time in this article, sits at $1.96, so we're already below that $2 psychological level, and the question becomes, is this the bottom, or are we heading lower? Which brings me perfectly to Article 2. And honestly, this one explains a lot about why we're seeing this specific action right now. We've got whale movement data that's absolutely fascinating, and crypto charting expert Ali Martinez documented something that shook the market. This is where it gets spicy. Over 190 million XRP tokens got liquidated by large holders in just 48 hours. That's approximately $95 million worth of selling. That's institutional level liquidation volume, people. Now, before you panic, listen to the context. Ali Martinez's analysis reveals something really important. Look at the Elliott wave setup on his chart. Starting from mid-August when XRP was near 60 cents, it peaked in late September, then embarked on a steady decline, bottoming around 50 cents by mid-November. The shading in this chart, look at those volume bands, shows waning buying interest and dominant sell-offs in recent sessions. Here's the critical part. This isn't just retail panic selling. On-chain data from Sentiment confirms that addresses holding over 1 million XRP have been trimming positions aggressively. These are whale wallets and they're moving. The question is why? The timing is absolutely wild. Just last week, Canary Capital's spot XRP ETF debuted on US exchanges and pulled in $58 million in assets under management on day one. That's institutional appetite right there. And today, literally today, Bitwise's XRP ETF is going live, which potentially injects fresh liquidity into the entire ecosystem. So, on one hand, we've got these massive positive institutional catalysts arriving. Ripple's been waiting years for these products to launch, following Bitcoin and Ethereum's ETF successes. Yet despite all this, XRP is down 15% year-to-date and range-bound like crazy. That's when you have to ask yourself, why are whales dumping right as institutional products hit the market? According to analysts like Zach Rector, there are accelerated timelines for additional XRP ETF filings from Grayscale and others, hinting at a potential 2026 floodgate. But clearly something's spooking the market right now. The analysts quoted in this article outline two competing narratives. The optimists say this is strategic rebalancing, smart money locking in gains after SEC clarity was finally achieved and pivoting into higher beta assets. Plus, Ripple's on-demand liquidity network continues expanding, processing billions in cross-border remittances monthly. That's real utility, that's not speculation. But the pessimists? They see red flags. We still have prolonged legal overhang from the Ripple SEC saga lingering in the background. Add macroeconomic headwinds, elevated interest rates, geopolitical tensions, and it's rational to see why whales might be taking profits and heading for the exits temporarily. Now here's the part that actually matters for your trading decisions. The technical levels supporting this wave suggest potential support at 82 cents, with a harder floor at 40 cents if things really cascade. But look at what the analysis calls the preferred scenario. One final dip toward 82 cents before recovery. Community chatter on X is split between people crying about losing their 150 dreams with the XRP army and others calling this capitulation bottom. So let me connect these two articles because they're telling the same story from different angles. Article 1 shows us the technical breakdown. XRP below $2, extreme fear, RSI oversold, massive liquidations triggering. That's the market mechanics. Article 2 explains the whale perspective and the institutional catalyst backdrop. Smart money is potentially repositioning ahead of multiple XRP ETF launches, and retail is panic selling as a result. Here's my take, and I'm being real with you. This smells like capitulation. When you have this much fear, this much whale activity, this much negative sentiment, combined with institutional catalysts literally hitting the market simultaneously, that's not a coincidence. That's the market shaking out weak hands before a move. I'm not saying XRP's going to the moon tomorrow. I'm saying the risk-reward right now is actually compelling for patient investors. The downside is capped around 80 cents based on the technical analysis. But the upside, if those ETFs bring institutional money, we could easily see a $2 to $3 range within 6 months. If this analysis is resonating with you, please hit that like button, and if you're serious about understanding crypto markets at this level, subscribe and turn on notifications because we drop videos like this every single day. One last thing, and this is important. The Fear and Greed Index sitting at 11 tells you we're approaching an inflection point. Historically, when fear gets this extreme, you're usually 3 to 6 months away from a significant recovery. Not guaranteed, but probable. The whale dumping? That's likely profit-taking and strategic repositioning. Remember, whales don't sell without reason, and in crypto's grand theater they rarely sell without having a script. The plot twist might literally be unfolding right now. XRP's utility case is, honestly, stronger than ever with the ODL network expanding and, multiple ETFs launching. The price action is brutal, sure, but the fundamentals for recovery are definitely there. This could be the capitulation bottom everyone's been waiting for. Drop a comment below. Are you averaging down on this dip, or are you waiting for more confirmation? I really want to know what you're doing. Listen, I have to say this. Nothing I've discussed today is financial advice. You need to do your own research, understand your risk tolerance, and make your own decisions. Crypto is volatile. Do not invest more than you can afford to lose. That's not me being cautious. That's me being real. But here's what true understanding market structure, whale movements, and technical levels makes you a smarter trader, and that's what we're building here at Gold Rush Crypto Daily. Thanks for watching, stay bullish, stay smart, and I'll see you in the next one. Peace.